Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Monday, March 17th. And yeah, I think that we might be seeing a bottom here in the markets with Jim Cramer flipping bearish. I think that we're going to be going higher. And so, yeah, let's dive into the normal tickers, which is always going to be starting off with the UVIX here, which is the 2X long VIX Futures ETF. We can see that we are back in this, little red box here. Of course, that is just arbitrary, but we did hit a high last week on March 11th at a price of $52.99, having closed the week at 38.44, being down over 17% on Friday, looking like we may very well be heading down to these moving averages here, right around $32. So that is what I am going to be looking for. That is what I am going to be waiting for over the next, week or two, seeing if we do start to form a bottom. I do think that the UVIX is a good one to be holding if in case we do get some volatility like we have seen since the end of February. Over here on the 20th, we hit the bottom at a price of 25.85, and from there we rallied about 100%. And so I, of course, only took about 20% profit, missed out on a lot of this run, because if you look at the past, it doesn't always go up 100%. But I do think that this is a good way to hedge with whatever happens in the markets. This could be a nice way to make a little bit of money if the others do go down. And this also doesn't have expirations like the VIX does, which I'll go over in just a second. Did want to flip over here to look at the 10-minute time frame just so we can see how this did fade over the course of the day. On Friday, did get a little bit of a bounce into Friday's after hours, and it does look like let's see, where does this switch over to the 17th? Right around here. So it's just been kind of flat in the pre-market to the the after hours into the pre-market. And so, yeah, nothing too exciting with that, but I suspect with the FOMC on Wednesday, we might get a little bit of volatility, but I'm expecting JPOW to be, somewhat dovish. And so I think that the UVIX will be heading down. And looking over at the VIX, this is the Market Volatility Index, which closed on Friday at a price of 21.77, being down 11.72% on the day. No pre-market or after-hours trading on this one, as it is options. And one thing that is pretty important that we're still not below is this $20 level here, and that would be getting below that 21-day moving average at $20.69. So, gotta have fun with the numbers, and I think that this week we will be seeing this heading below $20 a share. So do look for that. And, one thing, I think I talked about this in last week's videos, but we do see kind of this double top here. The red line here marked at 28.32, hit the highs last week on the 11th of 29.57, getting some wicks up, piercing that red line, but getting rejected. No volume here to really be able to compare if that was a weaker push to the upside, but we can look over at the UVIX to check that out. But one thing that we can see is we do have higher highs here in the price of the VIX, whereas we see lower highs with that RSI. So that is bearish divergence, and from that we are seeing this pretty notable pullback from the highs. It looks like we've come down about 26%. But then real quick, just flipping back over to the UVIX, we can see that we saw lower highs here. And the volume with the highs here was around about 9 million shares. I was reading the RSI, 8.94 million shares, whereas over here with the highs, we saw 5.75 million or so. We did see an increase in volume here as it was going up, so that was looking good, but we couldn't even get to these prior highs before that volume started to fade. And so that did suggest some weakness. Also did get a rejection from that 200-day moving average, that blue line there at around 46.53, right around $50. So, not too surprising there. But yeah, I think that this one could be heading down to 30, if not, 32, if not 30. So that is what I will be looking for. But now let's flip over to the SPY. Got a lot of drawings on this. I kind of need to clean up a bunch of this crap. So, I'm not going to delete. Oh, man. I don't want to delete this because it marks that all-time high, but maybe I can just remove that 0% retracement because we already see that mark there as the high. This prior low from January 13th is at a price of $575. And with that, we do have a confluence of levels, one being this yellow downtrend here, which was resistance here. And then once we broke above it, we got these kind of, fade up weeks followed by gap downs over the weekend. I believe this was DeepSeek and this was the trade wars. That held as support, and this orange line held as resistance until we broke above it, but that was just a fake out before this massive drawdown, coming down over 10%. I feel like that's just a nice little market correction, and we will be seeing a bounce here to this blue little doodle that I have drawn there. And by the way, I should mention that the SPY is the S&P 500 tracking ETF. I'm sure you're all aware, but that closed on Friday at a price of $562.81, being up 2% on Friday, so looking pretty good there, but pulling back about 0.3% or around $2 in the pre-market, currently trading around $561. And so, so we do have this, confluence of levels, also have that 200-day moving average at around 570. And then we can also see this light blue downtrend that I have there, which is based on these three pivot points. And really, just all of those levels do kind of correspond with that. But, I'm actually wondering, should I be adjusting this parallel channel because we do have the highs here? Maybe it's not valid anymore. I'm not really sure, but it did seem like a nice range that we were trading in the past, so I'm just going to leave it. So I think that we could be seeing a bounce to around 575 this week, although I do have this green uptrend drawn here based on the lows from April 19th as well as August 5th when markets gap down. We all know that day, and that would be a price coming down a little bit lower to around 545. So I do think that's a possibility, but generally I think that the stock market will be rallying this week. And one of the reasons for that, aside from Jim Cramer being bearish, one of those reasons is that if I do flip over to the weekly time frame, we can see that last week's candle is a hammer with this nice big wick to the downside, hitting a low of $549.68 and closing above that 50-week, because we are looking on the weekly time frame, the 50-week moving average there in yellow, closing above that. So I think that's looking really nice. And from last week, from 2 weeks ago, we do have this pretty big red candle here coming down 3% over the course of the week, and then gapping down into last week. So we do have this gap to the upside on the weekly time frame that does still need to be filled. And what this could be doing for us is, to be honest, I'm not sure if this would be a morning star or an abandoned baby, but if we do see, let's see, a gap up, it's probably not going to be an abandoned baby because I don't think we'll be seeing a gap up. But if we do see a big green candle over the course of this coming week, that would be a very nice indication, obviously, that the bottom is in, and that we could be going higher, that we will be going higher over the course of this week. So I would really like that look. And one thing is the 21-week moving average that is up here around 592. That might be acting as resistance a little bit below a couple weeks ago. It's the highs from 2 weeks ago. But flipping back over to the daily time frame, we can see that 200-day moving average at 570, and then these levels up here ranging from about 585 to 592.5. So look for some moves up there. If I do bring my drawings back, don't want this to be too cluttered, but one thing that I can do is a Fibonacci retracement coming down to the lows here from those highs, and we can see some levels that we might be bumping into as resistance. I'm just going to add them here, one being the 618, that's around 589, corresponding with that 21 and 50-day moving average, so pretty nice level there. And I believe maybe it's the 382. Yeah, the 382 does have some nice confluence with that little blue circle there, and that is going to be around 574. So yeah, look for the SPY to be getting in to the 70s there. I will also throw up the 50-day moving average, but that doesn't really stand out to me as being too significant, so I might just remove that. But we can see here that, this prior low over here, confluence of levels, 575. I think that is going to be where we are headed. And also, I should note that, I kind of did this retracement following up on Colin Gladman's video that he did put out. I think I shared it to the channel, so you can check that out. He goes over tons of stocks, some in the quantum space sector, which would be, quantum computing, not to be confused with QuantumScape. He seems to be expecting some nice rallies in the coming week. So, I'd have to say, based on largely, this weekly pattern here, which is also reflected in the GameStop chart that I did go over in the weekend video. So, I think that we're looking pretty good. And before I do switch over to the SPX real quick, did want to go over the 10-minute candles here. We did see kind of this float up and then consolidation on Friday. So held those highs in the after hours on Friday, but then gapped down in the pre-market today. But it does look like we're floating back up, so we'll see. But I suspect that, things might be kind of, not too exciting until Wednesday when Jay Powell speaks. Then I think that we could either see some moves to the upside or downside, and I suspect will be going higher, like I said, to 575. But quickly looking over at the SPX, this is the S&P 500 index, closed on Friday at a price of $5,638.94, being up over 2% on the day. And just like with the SPY, I think that we are going to be heading back into this zone. That will be around $5,773 or so, marked by those levels. Could be going higher, maybe up to $5,900. But, we're just going to have to wait and see what happens on Wednesday. Should note the 200-day moving average is at $5,740. So do keep that in mind. I do think that we have some upside potential with this. I'm not going to flip over to the 10-minute just because, there's no pre-market trading with this. And, I got to get headed to work soon. So on to the next one, which is, of course, going to be Bitcoin. It's currently trading around $83,000. And so I have to say, I've been pretty surprised by this one because, a couple weekends ago, we left this CME gap here between $86,000 and $87,000. I was expecting that to get filled by Wednesday of last week. That did not happen. And then following the close on Friday last week, it looks like we put in another CME gap around 84,600, right around there. And so just if you're curious how I drew those up there, if we just switch over to the 1 hour time frame, I base that on the closing price for the hourly candle for the 14th, so on Pi Day at 4 p.m. Eastern. So the close for that candle looks like it rounded it up by 4 cents, but the close there was $84,590.66. Do have that red line there. Did get a wick up to it, but that was on Saturday, so we need to be seeing that CME gap filled at around 84,600. And then also the other one is going to be around 86. And so for me, what I did with this is rather than just doing like the normal $5 DCAs, which I still have been doing, I just added an extra 10 and then another 10, so $20 around here, just to see kind of a little experiment over the course of the week to swing that up for, a 5% profit, something like that, up to around 86,000. That did not get filled, obviously. And I was considering selling it for just like $1 profit, so 5%, nothing big, but just kind of a little experiment. But I decided not to do that because due to the spread for this trade that's on Robinhood, that was not filled. And I didn't want to settle for less than $1 profit just because that's kind of lame. And, I'm fine to hold Bitcoin, $20 worth, no big deal. And so I am, really just going to be waiting and for that $86,000 level to be hit. And one thing that I'm sure you guys have all heard about, there is apparently a whale going pretty short Bitcoin as well as ETH, but I think that they closed their ETH position. I learned about that from Crypto Rover, so you can check out his daily videos to get an update on that. But I believe he was saying this morning that it's about $444 million going short Bitcoin. And so one might think that, price is going to be heading a lot lower, maybe down to like a $75,000 level. But at the same time, maybe because there is this big position that is short, maybe they get squeezed out. And from what Crypto Rover was saying, their liquidation level would be 86,000. So that matches, kind of with this little swing trade that I've got going on. So, that is what I am thinking for Bitcoin, that this is probably going to be going up to at least 86,000 this week, but it could also be flushing down to around 75,000. And so kind of my thesis with that level there, that alert there, is really just based on these prior highs around 74,000. A lot of people looking for those levels to be retested, but maybe we don't get quite to them, and 75,000 is hit. And so for me, that is just, an addition to my $5 daily DCAs. That would just be, a $10 limit buy, and then also 72,000, which would correspond with the 61.8 percent, Fibonacci retracement there, the 618 at around 72,000. And then of course I do have, an alert at 69,420, just having some fun with that. And, if we do get down to like 72,000, that for me would be, kind of a level to be like, hey, I want to get a little bit more aggressive with my daily DCAs and maybe just do kind of a lump sum grab of this, because I think that by the end of the year, we will be back up into the hundreds. Maybe, the next level up here I have is around 118,000. So maybe by the end of the year, we're up to that, but I suspect we'll be higher. So yeah, I'm just feeling really good about this. Not going to be diving into any more of it really, but I guess, we can see this yellow downtrend that we're kind of hanging out around. So maybe there's some significance to that. But yeah, I think that we're going to be either sweeping the lows here around 77,000 or breaking out up to around 86,000. So that is what I am looking forward to. And then I also did want to add Ethereum to, these pre-market preps. Just because everybody hates Ethereum, it's currently trading below 2,000, around 1,900. And, I don't have anything drawn up here, but yeah, I just think it's like such a dud. And that's really like, the time to be accumulating. So in addition to Bitcoin, Doge, I'm also doing, $5 DCAs with Ethereum. But I actually upped this to $10 just because I feel like it's at such a discount. And I really don't like the gas fees of Ethereum. So I've kind of been avoiding it. But I got some alts, some, meme coins, whatever, on Ethereum, some ETH tokens. And that kind of got me back into, hey, there is some value in ETH, being able to move those tokens around. And I just think it's like totally oversold, and getting back just to the all-time highs. I believe these are the all-time highs, around 4,000. Getting back to them, that's clearly, more than 100%, more than a 2x to the upside. So I just think that there's a lot of potential with Ethereum. And if Bitcoin is to be rallying above 100,000 again, I think that ETH could be taken off to maybe like 6,000, maybe 8,000. And so, there's a 2 to 4x potential at these levels, and $10 DCA, that's nothing too crazy. But yeah, I mean, I don't really have anything drawn up on this, so maybe I'll just do like one line a day. And so I'm just going to go from, let's see, the lows over here, and I'm just going to be a little bit biased. I'm thinking that, yeah, actually, this line's crap. I'm not going to do that. Let's see. Maybe I want to switch over to the weekly. Clearly, we broke below this uptrend here. So let's see. Going back to the lows of sub 90. Man, believe it or not, I had bought some. I think I was holding ETH then. Yeah, this actually looks really nice. This looks really nice. Look at that. I should probably draw this in the log scale just because it's going back so far in time. But yeah, going back to that low of $89.66. Beautiful, connection there with the pivot low of $880.16. Did, retest that over here. And we're testing it again now. So yeah, I mean, I think that just looks like a really nice level of support. If I do put this over on the daily time frame, really just want to make sure that those pivot points do match up with those lows, and this one could be shifted a little bit, so I'm just going to move that over. So we got that lined up there, and yeah, I mean, this is where we are at. So I think that this looks like discount zone, and possibly we could be breaking below this level. I think that'd be a fake out breakdown, maybe get down to like 1500. So yeah, I mean, I'm not fazed by this. I'm excited by it. And one thing that I might do, since I did mention the log scale, let's see. Yeah, I mean, I draw it on the log scale, and we have very clearly broken below that. So yeah, maybe, this is just completely breaking down. But if I flip back over to the linear, I think this is looking really good. So, and I guess, yeah, these weren't the all-time highs. The all-time highs were close to 5,000. And so, yeah, I mean, I just think that ETH has so much potential here. So, yeah, I'm excited about it. So I just wanted to put that on the daily pre-market preps. And then finally, I'll be closing with uranium. This is ticker symbol URA, the Global X Uranium ETF. I did look over at uranium, the commodity, on TradingView. It looked pretty similar to this chart, so I'm not really going to be going over that in depth over there. I think that this is a fine one to be looking at, and we did close on Friday at a price of $23.90, being up about 1.66% on the day and continuing higher in the pre-market. Looks like we're up about 0.75% or around 18 cents. And so with this, I had talked about this consolidation over here, expecting this to break down to at least 2450. We are currently below that level, and it does look like, I mean, this is the thing that really stands out to me as just being beautiful with this chart. We do have like this double bottom low over here with the low from August 5th when markets gapped down, as well as the other pivot low from September 6th. Draw a trend line from those two lows, and that's where we have retraced to. We found support, looks like a double bottom there. I think that it is also possible that this could break lower based on this Fibonacci extension coming down to around $22. So I think that's possible. That's the 1618. But also, I think that people might be getting greedy waiting for that. And I think that this little doodle of stair steps going higher could be happening. And I might just delete this blue line here because that's a gap that was filled. Don't need that to be cluttering the chart. Got to try to clean up the charts a little bit. But of course, we can see this gap up here to the upside around 30.50. And from current price, just going to remove those drawings for a second so I can see where the current price is right around here. Filling that gap would be about 27.5% move to the upside. So I think there's a lot of potential with uranium. I think it's good for the country. Need to be building up our uranium, our nuclear infrastructure. And yeah, so I just think that there's a lot of upside with this, but I also think that there are other stocks that are perhaps more exciting, like Oklo, which I do currently hold a very, very small position in. But from what I understand, the ticker symbol URA ETF is not necessarily that well managed of a fund, so that is kind of why I'm interested in Oklo. But I think this is a good one to just get kind of a general overview of uranium, finding that bottom there. I think that we've got a lot of upside. But anyways, I got to get headed to work, so I'll just leave you with that. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot and have a great day trading, guys. Take care.